أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والعاقبة للمتقين والصلاة والسلام على رسوله الكريم سيدنا محمد وآله وأصحابه أجمعين برحمتك يا أرحم الراحمين. All praise due to Allah, the Lord, cherisher, nourisher, sustainer and master of the universe, the most gracious, the most beneficent, the most merciful. Ya Allah, it is only you that we worship and it is your guidance that we seek. Ya Allah, keep us on the straight path. Ya Allah, shower us with your choice of blessings. Ya Allah, shower us with your mercy. Ya Allah, guide us. Greetings, salam, salutations on our beloved Nabi Muhammadur Rasulullah sallallahu alayhi wasallam. Yes, it is another Friday night, the end of the week and the beginning of the weekend. Time for us to wind down. Assalamu alaikum wa rahmatullahi wa barakatuh and welcome to Let's Chat on Radio Ansar with myself, Faizal MJ Suleman. Engineering for me this evening is Siboniso, and of course program has been produced jointly by Farzana of Amal and Hajra Kota of Radio Ansar. So our topic for discussion this evening: empowering NPOs, thriving amidst change. Sounds like something that's quite, shall I say, difficult to absorb, but it's quite simple. We're talking about non-profit organizations or NPOs playing a crucial role in addressing some of society's most pressing issues. However, in an ever-evolving world, they face unique challenges that require resilience, adaptability and forward-thinking. From shifts in funding landscapes to technological advancements and changing community needs, NPOs must continuously innovate to remain effective and impactful. Our very special guests this evening are Reza, Amra and Farida, Lavangee. Reza, assalamu alaikum wa rahmatullahi wa barakatuh. Jazakallah khair for joining me on the program this evening.
Wa alaikum salam wa rahmatullahi wa barakatuh, and good evening to the listeners out there as well. I'm not sure whether it's going to be a winding down session Friday evening and to be talking about tax and compliance, but nevertheless we'll try and do our best to make it as easy as possible.
Inshallah. Farida, Lavangee, assalamu alaikum wa rahmatullahi wa barakatuh to you as well, and thank you for joining me on the program this evening.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Like Reza said, it's going to be an interesting evening, I think. It's been a long week for us, so I hope the listeners are going to enjoy what we have to share. And I hope it's not too technical. We're going to try and keep it light, keep it practical, so the listeners out there can follow and understand what we're talking about.
Excellent. Well done. Just to introduce our guests, Reza Amra qualified as a chartered accountant at a Big Four audit firm. Reza has over 19 years experience. 19 years, Reza. Excellent.
And 4 kids later, by the way.
Including the past 14 years dedicated specifically to the NPO sector. He's currently the Director of Risk and Compliance at Turning Point Chartered Accountants and is also a co-founder of the innovative digital fundraising platform 10 Bucks Only, revolutionizing how NPOs fundraise and manage 18A receipts. As a registered tax practitioner with SARS and a member of the SICAR Eastern Regions Tax Committee, he contributes to and provides valuable insight into practical challenges faced by the NPOs, advocating on behalf of the sector. So, Reza, you seem to be a tax fundi.
Not really. I like to think of myself as more the practical in terms of taking on SARS with the boxing gloves, obviously advocating on behalf of the sector as well. There's obviously more than 275,000 registered non-profit organizations in the country. And what we do find as one of the challenges is that most organizations don't have the skill set or even the advisors that specialize in the sector as well. So yeah, we do have tax specialists in-house at the firm itself, but I wouldn't call myself a specialist, rather someone who's a bit more practical and gets their hands dirty, dealing with SARS face to face.
First is 18 years experience, and it's not dynamite comes in small packages, yeah. Then displays modesty as well, but excellent. And Farida Lavangee is a highly accomplished chartered accountant and registered auditor with over 20 years of audit experience. She currently serves as the Director of Audit and Reporting at Turning Point Chartered Accountants, is a USAID accredited auditor. You must tell us what is USAID. And registered SaaS tax practitioner specializing in the NPO sector. She brings over 8 years of expertise in audit, compliance, risk assessment, financial reporting and systems reviews for NPOs. She has held a senior managerial position at a Big Four audit firm, served as a senior audit lecturer at one of South Africa's leading universities, and developed numerous training courses for the NPO sector. Farida, I see we've got two heavyweights in the studio. Excellent. I think we'll probably become tax experts in the next hour, inshallah. You were supposed to tell us what was the USAID.
So it's United States funding. So the U.S. government, when they provide funding to other organizations and countries across the globe, so there's a handful of auditors that are accredited. You have to undergo a specific training course, and so I'm one of the few in South Africa, and the firm is registered as well. So it's a very niche market.
Excellent. I think let's just start with the, I normally say ladies first, but let's just start with you. Okay, let's leave it ladies first. Farida, let's start with you, I think.
Okay.
What are the key compliance requirements that NPOs in South Africa need to be aware of? Now, Reza, in case you're getting worried, I'll give you an opportunity to answer that question as well, but let Farida go for it.
Okay, so in terms of compliance, it's quite a bit. It's quite daunting if you are a non-profit and you are in the finance department in an NPO, because there's quite a bit of compliance that you have to have a handle on. There's compliance from SARS, so you could have monthly compliance in the form of employee taxes. So if you've got payroll, which most organizations do, you've got monthly reporting to submit to SARS. You've also got Department of Labor then on a monthly basis. Besides payroll taxes, if you're registered for VAT, then there's also compliance with that aspect with SARS as well. And then the dreaded annual income tax returns. Fortunately for nonprofits that are registered as tax-exempt organizations, it is not as stringent as the normal company income tax returns. So that's SARS on its own. I'm not going to steal Reza's thunder and talk about some of the new SARS developments, which we are going to touch on later today. Then you've also got Department of Labor. So if you've got employees again, besides UIF, you've also got workman's compensation, which is an annual return that has to be done. Then we move on to Department of Social Development, which not all nonprofits will register. We're going to talk about when do you need to register. But if you are registered with the Department of Social Development, then they also have specific compliance requirements, which is you've got to submit to them a report within 9 months of your financial year end. I'm trying to think if there's anything else that I've missed, Reza. So we've covered SARS, we've covered Department of Labor. And then, yes, there's obviously the statutory requirements. So if you're a company, then CIPC has requirements for you. We're going to talk about beneficial owners later today, but I don't want to give everything away right now. This is just the first question. But yeah, in a nutshell, there is quite a bit. So as somebody who's in finances and in an NPO, it's quite a bit of compliance matters that you need to be on top of. A lot to unpack.
Thank you. I think this is quite a bit.
Now you know why I've brought Farida in.
Yes, of course.
She's got it covered, so I can just sit down and relax for the rest of the evening.
In fact, I got to just tell Subani, so he's probably working overtime. Okay. Reza.
I think Farida's pretty much covered, all of the compliance itself. Just to take it a step back, perhaps, is that, sometimes what we do find is that organizations are unaware of the structure that they're housed in. For instance, you get an organization that wants to register, but the first thing they need to know is the structure within which the activities are undertaken. And just to break it down in a simple and easy to understand manner, like you'd have a private entity that would be running a business, that business will be run in a PTY Limited. But with regard to a non-profit organization, there's only 3 structures within which they can operate. One would be a non-profit company, a non-profit trust, or voluntary association. So once they've got those structures obviously registered, and your founding documents established, this is where the registrations thereafter with SARS or with the Department of Social Development would come in. And in order to maintain their status thereafter, they would need to proceed with the submissions that Farida mentioned as well.
Now, you mentioned 3 structures.
Ji.
Do all of these structures have a similar sort of requirements? Are the liability of these structures, is it the same? Because normally I think, when it comes to structures, you then want to protect liability and the directors of these companies, personal involvement as well.
So with regard to the structures, it comes down to obviously the organization themselves. There's no specific tax benefits that would flow into a structure that would differentiate one from the other. However, in terms of obviously the founding documents with the non-profit company. You'd have a memorandum of incorporation. With the non-profit trust, you've got your trust deed. And then with the voluntary association, you've got your constitution. Furthermore, you've got separate pieces of legislation that govern each of those entities. You've got the Companies Act, you've got the Trust Properties Control Act, and then the common law. And depending on those pieces of legislation, the requirements would differ in terms of the onus that's on the directors or even the trustees as well.
Interesting. My thoughts right now on the voluntary associations. And I'm just assuming the voluntary associations, the members of this association will probably be personally liable for the acts of the association itself, unlike maybe a company where director is not personally liable. I'm asking. I'm not making a suggestion.
From a voluntary association perspective, I don't think the members itself take liability. It depends on how the constitution, I think, is worded itself and how it's set out legally. But we found that generally from the three, the most administrative one and the most amount of burden on an individual is your companies, because that one is you're governed by the Companies Act, which is legislation that you've got to comply with. And being a director on an NPC, there's a lot more requirements of you and a lot more onus on you as an individual as compared to the other two. I know for trusts, there are certain requirements for you, but your obligations, or you're not personally liable for anything that happens to the organization itself.
Absolutely. Unless you've acted mala fides.
Yes.
Okay. Can you then explain the importance of financial reporting for NPOs and how it impacts the operations? And I think, Farida, you indicated to me you want to answer this question.
Yeah, I guess...
indicating, my apologies.
Yeah, it falls under my ambit. So if we just take a step back, nonprofits obviously rely on funding, right? So they rely on donations, be it from the general public or be it from organizations that are funding them, in order for them to actually carry out their activities and their core principles or core values that they want to achieve, right? So, but what we find is that, and we've been working now, Reza's been working in the space a lot longer than me, but in my 8 years that we've been here, and I come at it from an audit angle because I do audits on nonprofits, most of the time you speak to people and you can see the passion that they have for what they want to do, but their operations or their program activities are running exceptionally. They've got the processes in place because they know this is what they need to achieve, this is what, they've got the funding for. But then when it comes to the finance part of things and the management part of things, that's where things tend to slip, because that's like, the part of the family that you don't want to worry about. You only want to focus on just doing your core work. So, and that's the core financial reporting. So what we found is that most nonprofits itself, they don't have the proper foundations in place for financial reporting, which then comes back to bite them, because if you're not reporting or maintaining proper finances on a month-to-month basis, and we now even say you should be doing a week-to-week basis with some of the technology that's out there, you're not going to be in a position where you're able to know where your money is going as an organization. You may not be able to even pick up if there's any mismanagement of your funds. So in order for an NPO to actually be running, what's the word I'm looking for? To be accountable, to be transparent, they need to have proper financial management processes in place. And that the end result with that is that you will also get, your donors will be more willing to fund you, because they see you as an organization where their money is doing the work that it's supposed to do. It's being managed well. So the importance of financial reporting for an NPO is so significant for their success and for the longevity of the NPO itself.
No, I think that's absolutely vital, and the transparency is absolutely important as well, because it impacts, as you say, on the donors. Reza, how do the various tax-related matters like income tax exemption affect NPOs in South Africa?
I think we must remember that non-profit organizations essentially are an extension of government. And why I would say that is that if you look at the space in which non-profit organizations operate and the activities within which they're involved in, a lot of the time, it would be mandates of any government, whether it's education, whether it's healthcare, skills development, poverty alleviation, disaster relief. But obviously, with the limited resources that governments have across the world, that's what's given birth to the non-profit sector itself. So what governments would do is they would obviously now ensure that non-profit organizations have certain tax benefits that are available to them. So they're not impeded in any way whatsoever. And from a South African perspective, this is where your public benefit organization status kicks in. So non-profit organizations would need to apply to the SARS tax exemption unit in order to register as a public benefit organization. Very often, I think organizations are so thrilled at getting the approval themselves as a PBO that they fail to actually go through and have a look at what this really means and go through the clauses within the tax exemption letter that's issued by SARS. And in doing so, we find that organizations don't take full advantage of being registered as a public benefit organization. There seems to be a perception that we exempt, and there's a blanket exemption from all taxes, which isn't the case. It's a partial exemption from income tax, and then there's certain additional tax benefits that flow from there. Benefits like donations tax, transfer duty, capital gains tax. So it can be quite a minefield for non-profit organizations to identify which of those tax benefits they could take advantage of. So to give you an example, for instance, with regard to value-added tax, not all non-profit organizations would qualify for that benefit, for example. So what we do is we encourage organizations to obviously go through and have a look at what that tax exempt status means, because that's merely unlocking the door to the actual tax benefits that are available to them.
Now, how problematic or how easy, I don't want to be negative, how easy is it to register as a PBO? And once you've done that, and that's why I use the word problematic first, once you've done that, to register to get the tax exemption, is it a problematic process?
He's going to hand this over to me.
Yeah, Farida's got plenty of experience with regard to the headaches that we've had. But I think it seems to be mainly post-COVID that it's gotten a lot worse.
So to answer your question, it is quite difficult at the moment when we actually do these PBO applications. Okay, so the process itself is not difficult. Filling out the forms, collating the documents. There is a lot of information that SARS requires, but that process is actually quite seamless. The issue comes in is once the documents are submitted to SARS, that's where the delays come in. So previously we used to give a timeline. We would say 2 to 3 months, and we would follow up with you for you. But since COVID, like Reza mentioned, it has taken not a little bit longer. It's taken a lot longer. But SARS seems to now have put in some new processes, so we are seeing some changes coming through. But it is a process. You're looking at between maybe 3 to 6 months, if not longer, to get the PBO application, provided it's a seamless, not a very complicated one. I think when you have, especially the Islamic organizations where they're doing both Islamic work and they're doing welfare, normal general welfare work, so there's some complexities that come in there because Islamic work, whilst it might qualify for public benefit organization status, it doesn't qualify for 18A. Which is a separate tax benefit that non-profits have. So I think when we have those complexities coming in, then the process does take a little longer because you have to convince SARS that this organization is actually doing both. It's doing welfare work for the general public, but it's also doing some Islamic related work.
Thank you for that, Farida. 060-904-1056. You have any questions for our panel? You have any comments on the topic that we're discussing? Please forward your comments, your questions, etc. to us via WhatsApp. There's a message that's come through. Salam, love the show. First time from Mariam. Shukran. Thanks for that, Sister Mariam. 060-904-1056. What steps should an NPO take to ensure that they remain compliant with tax regulations? And I'm going to leave this open to the both of you.
Okay, you want me to go first? Okay, so I think the number one step has to be, first of all, I think organizations need to be aware of what are all of the different compliance requirements that's applicable to their organization. So step one has to be that there needs to be an awareness. Step 2 is, once you are aware of all the different regulations affecting your organization, I think from a finance point of view, you need to put in place processes which will allow you to actually meet those requirements with ease. And some of those processes could be your actual financial reporting process itself. I mean, if we're talking about submitting information to SARS on a monthly basis, your accounting system should be able to provide you with that information. And then I think the last part for me would be is that it's all in well knowing what your compliance requirements are. But if nobody is monitoring the deadlines and monitoring that those deadlines are being met, that's another issue for organizations. So for me, it's those three things. I don't know if Reza has more to add to that.
Yeah, I think working in the sector now from 2009, if there's one thing that I've picked up over the years, and it seems to be a common theme, is that ignorance is bliss. And if it's not broken, why fix it? So with regard to that, what I would say is I think education becomes quite critical. We've been commanded to read and to constantly seek knowledge. But with regard to ensuring that your organization is maximizing tax benefits and is taking full advantage of it, for some odd reason, we seem to be reluctant to go out there and take what's being given to us by government. Remember, SARS is not going to come knocking on your door as a non-profit organization and say to you that you haven't taken advantage of being registered for value-added tax, for instance, or you've paid transfer duty on a property purchase when you shouldn't have. The onus is up to the organization. And as a firm, I think this is where we've decided that our capacity building programs become quite critical, because the only way to change mindset is through education, and in terms of empowering organizations with the knowledge and the skills to allow them to then make informed decisions and assess from there in terms of their tax compliance and ensure that they are maximizing tax benefits. So for me, that will be the number one priority, is to ensure that those individuals and stakeholders within your organizations, whether it's the treasurer or whether even if it's the person that's answering the phone, that they know and have the requisite knowledge to be able to respond to a potential donor, for instance, that comes in with a question about 18A receipts, for example. So I think for me that would be the most important point, is to make sure that your organization is geared and upskilled in terms of these aspects.
Thank you. Farida, you want to add to that?
No, I think Reza's touched on the capacity building, which I think from our experience of working in the sector, that is one of the biggest problems we see, is that there's just a lack of knowledge. And often it comes down to, the people in finance roles are generally they're not qualified, or maybe they've just been there the longest and they've been given the task of managing the finances and ensuring that they are doing all of these submissions, but not really fully understanding why they're doing it, what is supposed to be done. So I think that capacity issue is one of the biggest issues facing the NPO space from a finance and reporting perspective.
Yeah, perhaps just to also just add on that, Farida, is that what we also find, and it's a challenge again, across the spectrum, is from a South African perspective, there's really not much specialized support to non-profit organizations. Similar to the medical field, where you've got specialists in each area of medicine. And likewise, I think the accounting or the finance and tax profession as well, you do have specialists in each field. But with regard to the non-profit sector, as massive as it is from a South African perspective, we don't find many specialists, whether it's from a legal, tax, accounting, or even audit perspective. And sometimes it's an injustice to the sector itself.
No, because you need that guidance.
Have to.
And especially these are uncharted waters. So what you rightly said is we all need to be educated. There needs to be a sense of awareness. And did you say there are 175,000 organizations?
I think when we last looked at stats, this was, I think, just around COVID 2019, 2020, there were about 275,000 registered non-profit organizations with the Department of Social Development. Now remember, that registration is voluntary. So not all non-profit organizations go ahead and register with DST, because there's really no tax benefits that flows from there. I think your guess is as good as mine in terms of how big the sector is, because you have informal organizations operating out in rural areas that might not have a formal structure as well.
Absolutely. So do you all embark on any awareness programs? And I know you're going to tell me, well, that's why we're doing this particular show, so we can create that awareness. But, this aside, are there any awareness drives you embark upon?
Yes. We partner with various stakeholders, funders in the sector as well, key role players in order to host workshops and webinars. We've been doing that now for close to about 12 years, and these sessions are hosted countrywide in all the major centres. We have gone out to smaller towns as well, towns like Richards Bay, Heberden on the south coast, Randfontein up in Johannesburg, White River in Nelspruit. Okay. So we've travelled the length and breadth of South Africa, obviously trying to get this message across and to change those mindsets. But even then, I think you're still scratching at the surface in terms of reaching all non-profit organizations across the country, because I think if we are able to get the message to as many organizations as possible, it puts a lesser strain on the limited donor funding that's available. If organizations can maximize their tax benefits, then the donor rand goes the full mile. Absolutely. Okay, it's time for us to take a break, but before we take a break, the message from our brother Shabir Chauhan. Of course, he's I think head of Amal. Yeah. Says, Salams Faizal, thank you to Reza and Farida for making time available to appear on your program and provide information on a very important topic. Amal, the Association of Muslim Accountants Lawyers, are very grateful for this. We need to ensure that our NGOs are operating at the highest level of governance, whilst contributing to play a meaningful role in addressing social ills in our country. Very informative program, well done, and comes from Brother Shabir Chauhan. Shabir, Jazakallah khair for the sentiments. And of course, yes, we all learn, and we will continue to learn. And I think this is a perfect platform, to sort of educate and create this awareness. So thank you, Shabir, and we'll take a short break. We'll continue on the other side of this. You're listening to Let's Chat on Radio Al Ansar with myself, Faizal MJ Suleman. Our topic for discussion is empowering NPOs, and of course they are helping them to thrive amidst change. And our special guests are Reza Amra and Farida Lavangee, both highly qualified chartered accountants, tax practitioners, and of course master auditors too, if I can call them. And and they specialize in the NPO sector as well. Tell me, are there any recent changes in legislation that NPOs should be made aware of?
So I will touch on the one that came about last year, and Reza, I think, will touch on the one that's just been released this year. So we're going to talk a little bit about grey listing. I think we have a little bit to talk about later on, but basically South Africa got grey listed by the FATF. I'm not going to explain what FATF is, but basically when it got grey listed, they identified that nonprofits could be used as a vehicle for money laundering and terrorist financing. So with that, they've brought about some legislation changes. So the nonprofit organization, so NPO Act was amended, the Trust Property Control Act was amended, and they also introduced a new legislation. But the basic impact is that there's now something called a beneficial owner, ultimate beneficial owner. So previously, prior to grey listing, if you owned shares in something, nobody really knew who the shareholders were of an organization. CIPC didn't require that information. So it was something that was just internal. And now they've said, okay, well, because we worried about money laundering and terrorist financing, we now need to know who are the ultimate beneficial owners for organizations. So from a nonprofit sector, most people would have thought, okay, it's not really applicable because there's no shareholders in a nonprofit, in an NPC. There's nobody really that owns a nonprofit. But they've introduced definitions. So if we're looking at an NPC, if you're a director of an NPC, you're deemed to be a beneficial owner. So you now have to disclose that information to CIPC. If you're a trust, trustees are deemed to be beneficial owners, and now you've got to submit to the Master of the High Court. There's a template that has to be uploaded with personal information. And then if you're registered with the Department of Social Development, which we spoke about earlier, they also have certain requirements where you've also got to upload information. But one of the key impact with this change is that if you're an NPO that is doing work outside of South Africa, so you're a South African NPO, you're doing welfare work or you're doing humanitarian work or you're sending money outside of South Africa, previously, you didn't have to register with the Department of Social Development. But when South Africa got grey listed, one of the biggest impacts is that the non-profit organizations that are doing work outside of the country need to now register with the Departments of Social Development, which is not something that a lot of organizations are aware of. We know quite a few organizations that are doing work outside of South Africa, but they're not registered as NPOs with the Department of Social Development.
Yep.
So obviously there's a lot of compliance requirements that's come about with this. So over and above all the other things that you need to be on top of, this is an additional compliance requirements for organizations with the grey listing. I think Reza is going to talk about the more current one that's been released in this year. So I'm just going to hand over to him.
Yeah, I think one of the big changes that have come through this year is the submissions of the mandatory IT3D returns that non-profit organizations have obviously to submit to SARS. That's come in last year after, or rather it was actually the follow-up to the new requirements on 18A receipts that were released last year. With these additional fields, the intention is to now ensure that donations made to 18A public benefit organizations are pre-populated on donors' income tax returns. And in order for SARS to be able to do that, the registered 18A PBOs would need to provide certain specific information to SARS in a predefined format, which seems to be a bit of a nightmare at this point in time. The deadline was the 31st of May, but most organizations seem to be pulling their hair out to try and get this over the line. But we are supporting a number of organizations in ensuring that they are able to do so efficiently. And one of the platforms that we've introduced to assist organizations is the $10 only platform, where organizations can actually go in and use a free trial to capture their data and download a data file, which will enable them to actually submit the information to SARS.
So what happens to $10 now? You said it's free, so I'm just wondering.
So the charm is $10 only is a fundraising platform.
Okay.
And it's actually, a little can go a long way. So, we generally have or spend $30 on a cup of coffee, but for some reason or the other, we want or we find donating a bit more difficult and donating regularly. So what we'd like to do is that we want to make donating a habit. And I think that's where the charm of it all has come in, where your $10 is not really going to affect your pocket. And if you can, a minimum of $10, obviously, if you want to donate more to organizations on that platform, you're most welcome to do so. But I think in the old days, what used to happen is people used to put in their coins in a little jar, and after every couple of months, perhaps go out and give it to an organization, or perhaps even go out and feed. And I think that's where the concepts come about, is that little that
goes a long way.
It can go a long way, definitely.
2 WhatsApp messages come through. One comes from a newly elected Member of Parliament, Imran Subrati. Jazakallah to Reza and Farida for unpacking this very relevant topic on behalf of Amal. How does non-compliance by an NPO affect donor funding and donor relationships? Shukran Imran Subrati, Executive Secretary Amal. Let's deal with that first.
Okay, so it's me. So obviously, we got to understand what the non-compliance would be. So from a donor perspective, obviously you could lose donor support, because if your donor is aware that the organization is non-compliant, they're not going to fund you, because the whole thing about funding an organization is you want an organization that's transparent and accountable. So if there's non-compliance, it's going to lead potentially to loss of donor funding. Obviously, we need to understand what the non-compliance is, because there is a number of areas that organizations need to comply with. And another thing is that a lot of the times organizations are non-compliant, not because there's an intention. A lot of the time is because they don't actually know that they need to be doing something. And that's how the non-compliance arises. We come across organizations. I came across one the other day where they had 7 years of financials that was outstanding. So new management came in and they picked this up. 7 years, no financials, no submissions, nothing. And obviously they had to now get everything up to date. And that impact was for them. They lost funding because of the fact that they were not compliant with their SARS requirements. And then there's also donor requirements. Some of the larger donors have specific requirements in terms of where they want you to report either on a monthly basis or maybe on a quarterly basis, depending on what your agreement is with them. And if you are unable to meet those requirements, their own compliance requirements, that's even worse, because then they're going to definitely pull your funding. I've seen one organization where they had, I think it was $100 million.
Yes.
But they lost the funding because of non-compliance with donor requirements. Not because of fraud or anything, but because they weren't complying with what is it the donor was looking for.
Yeah. In fact, there's no transparency and no accountability as well.
Yep.
So obviously, any donor will wonder what's going on. Thank you for that. Then there's a message that comes from a sister, Lutfia Mullah. Great topic, broken down perfectly by the legends in this sector. Well done. Thank you for that, Lutfia. I feel great when being in the presence of legends, man. Excellent. Okay, let's talk about a bit of board management and governance, right? How does there's a code of corporate governance called the King the Fourth Code of Corporate Governance. How does this apply to NPOs? Maybe you can educate us on what this code is and then tell us how it applies.
So I was actually gonna, when we had these questions that we were looking at, my first thing was to unpack what is King 4 actually, because it is a lot of jargon if you're not in the space. So essentially it's a governance report. So it's South African, and it's looking at guidelines and principles that organizations can implement. It's not mandatory, so it's not legislation. The only thing is that for listed entities, yes, they have to apply King 4 principles. But the whole principle behind King 4 is that it's trying to enforce effective and ethical leadership in an organization. It's trying to show organizations how they can be a good corporate citizen. It focuses on things like your board composition, your board competence, so who should be sitting on boards, and what sort of what's the different committees that they can be on. But one of the biggest things with King is that it's all about accountability and transparency for an organization itself. So listeners out there might be thinking, okay, if it's mandatory for listed entities, what does it have to do with a little non-profit organization? So it can be applied. So King is one of those things. It's not a compliance document. It's a principle-based document, and they actually have an NPO supplement. So they've taken the principles that the King, and this report started off at King 1. I think when we were at Varsity, it was King 1. It's now in King 4. So obviously, it's been amended over the years. And from an NPO perspective, they've obviously got a supplement because they've understood that this is a sector that, yes, the full King 4 report might not be applicable to an NPO depending on its size and structure, but there are certain key elements. And one of the key elements, I think, for any NPO is the whole thing about accountability and transparency and effective leadership, because those are the core fundamentals for an organization, especially from a board perspective, that each NPO needs to make sure that they are leading their organization effectively, that they are accountable to their donors and their stakeholders, and that they're transparent in everything that they do, because at the end of the day, it's not their money. It is funded. They're funded by either the public or they're funded by donors. So they have to be accountable and transparent with what it is that they're doing with that money that they're getting.
Excellent. You want to add to that, Reza?
I think the last time I looked at King was when I was in university, so I'm going to leave it to Farida.
Back when it was King 1.
I met him personally. Serious?
Oh, okay.
Yes, I met him personally. Okay, message comes, message says, Salams, thanks for an informative program. I see there are individual foundations being formed. And she gives an example. Are foundations classified as NPOs? I think the listener is referring to the individual foundations.
So you could have foundations established by either an individual or even a family-owned business or even a large multinational business, charitable foundations. I don't think there's a distinguishing feature in terms of how those foundations are established in terms of being a non-profit organization. they more often than not, what we do find is that those foundations will be established as a non-profit trust. So it will still meet the same criteria or have to actually follow the same requirements as any other non-profit organization. And it can be established by an individual as well.
Okay, thank you for that. Another question comes from a brother, AC Khan. What's the legal tax or FICA implications for an organization that receives donations in a bank account and does welfare or charity work but is not registered as an NPO or PBO with the regulatory authorities?
Okay, so remember, as we mentioned earlier on, certain registrations would be compulsory and some obviously voluntary. With regard to registering as a non-profit organization with the Department of Social Development, unless you're obviously doing work outside of South Africa, like Farida pointed out, which was obviously a recent change, there's no requirement to register with the Department of Social Development. It's merely a good to have. It gives you credibility. You get an NPO number, so it gives you credibility in the eyes of the donor. You perhaps could qualify for certain discounts, but that's about it. With regard to registering as a public benefit organization, again, it's a voluntary registration. It's not mandatory for any entity to register as a public benefit organization. However, it would make sense for you to go and register as a PBO because that's where your tax benefits flow from. So with regard to receiving monies into a bank account and utilizing it for welfare activities, obviously in terms of the FICA requirements, I think that's outside my area of expertise. But with regard to obviously operating a non-profit organization that isn't registered as an NPO or PBO, you can still operate the organization in that way, but wouldn't make sense to actually do so though.
Would it not affect your personal taxes?
I'm assuming you've got as long as you've got the structure set up, whether it's the non-profit trust, the NPC or voluntary association, then you should be fine. Because remember, you need to first have the structure before going ahead and doing any registration itself. But yes, if you're doing it in your personal capacity, which sometimes does happen, you get a group of individuals, banded together, and they obviously undertake certain welfare activities on their own, then it could give rise to certain tax complications.
Yeah, I was going to say the same thing. If it's running through somebody's personal bank account, you're running that risk that, SARS has eyes on everything. So if it's in your personal bank account, money's flowing in, you might go under maybe an audit with SARS, and SARS wants to know what is the nature of all this money that's coming in. Why is it not being declared on your personal income tax return? So it would always be best if you are doing work, put it into an actual structure. If you want to choose the less administrative of them all, go trust or voluntary association, but keep it outside of your personal account.
Absolutely. Another question from Imran Subrati says, does donations for foreign relief such as Gaza, the not so long Turkish earthquake, etc., all fall under the Section 18 donation? If a business makes it, will it be tax deductible? Salams.
No, so remember, with regard to 18A, there are specific 18A public benefit activities that are defined in the Act itself. And any work being done outside of South Africa would not qualify for an 18A certificate. Remember, the reason being is that government's priority areas are obviously, the activities that are undertaken within South Africa as opposed to outside of South Africa. And in order to incentivize the donors, that's why you do have the 18A receipts, which allows the donor to deduct the donation amount from their income tax liability. So for any work that's being done outside of South Africa, an organization is not allowed to issue out an 18A receipt for that.
Just on 18A, just another important thing is that 18A can't, besides the overseas one, it can't just be issued for any work that a nonprofit is doing. So the public benefit organization definition for SARS is quite broad, so it covers a lot of things. But the 18A is a lot more restrictive. So, for example, there's a lot of Islamic organizations that build masjids or maintain madrasas. Those are not 18A. So very important for organizations to understand if they're getting money and somebody wants an 18A certificate, that funds can only be used for 18A activities. So they need to be aware of what is 18A and what would not be considered to be 18A activities.
Thank you for that. Now, what are the key roles and responsibilities of an NPO board?
Okay, so going back to a board, obviously the board is ultimately responsible for an organization, and that's the same as whether you're an NPO or whether you're a profit entity. As a board member, that is your role. You are responsible for the organization itself. Mm-hmm. So from a key responsibilities perspective, the first thing would be board is responsible for implementing strategic planning for the organization itself. So that would encompass them setting goals for the organization and then monitoring the performance against those goals. Mm-hmm. Another key role or responsibility for board would be financial oversight. So at the end of the day, the board is responsible for ensuring that the funds for the organization are being spent in the way it's supposed to. And how would they do that? One would be approval of organizational budgets, approval of policies for the organization, and then ultimately, if your organization is being subject to an audit, is to ensure that you've gone through those financial statements, you are happy with everything, and then you're approving them. The last bit, which is probably the most important, is risk management. So risk management is key in any organization. Whether you're a profit or non-profit entity, you have to have risk assessment done on your organization itself. Now, that responsibility falls on the board members. It is their job to identify what are the risks specific to their organization, to then assess those risks, and then put in a plan. So what is the plan to address each of those risks? Obviously, the plan or the implementation of the plan doesn't rest with the board. That is something that they can delegate down to management. Mm-hmm. But at the end of the day, as a board member, you've got to ensure that you are monitoring whether your plans are actually being implemented and followed. So for me, those are the three key areas that the board is responsible for in an NPO.
Mm-hmm. And of course, Reza, you are ultra quiet. Shall I just leave you there in that space for a while?
Yeah, I'm trying to think about the person that you said you met. If I'm not mistaken, the one thing I do remember about corporate governance, that his name was Mervyn King.
Mervyn King,
yes. That's the thing that stood out for me.
Yes,
at least Mervyn I remembered
King.
something from back in the day.
What are some common governance challenges faced by NPOs, and how can they be addressed?
Okay, let me take this. I think Reza can jump in at any time. Mm-hmm. So I'm giving you my 2 cents worth from somebody who does audits on nonprofits and somebody who also handles accounting aspects for nonprofits itself. So I wear 2 hats at our practice. One is I sit as an external auditor on NPOs, and then the other hat is where we actually performing financial reporting responsibilities for organizations itself. So from my perspective, I think one of the biggest things that I see is that there's a lack of understanding of what's expected of a board member. Mm-hmm. So often people go and sit on boards, but they don't actually know what is their role, what is their responsibility, what's the obligations on them. And so they can't actually then deliver or be an effective board member because they themselves don't know what's required of them. Mm-hmm. So that's one challenge. I think the other challenge that organizations face is retaining or attracting the right type of board member. Because, most of these boards, you're sitting there voluntary. Most of the boards, you don't get paid to be a board member. It's after hours. So are you getting the right type of person for your organization? Are you getting somebody who actually understands the NPO space, understands your organization, who's going to add value? Those are some of the challenges I think that boards face. Coming from an outside perspective, obviously somebody who's sitting on a board might have a different opinion, but from an outside perspective, that's what we see. It's that lack of understanding, and then how do we retain these people? Another one is obviously where board members are not playing an active role. And I think it comes back to the point, because it's voluntary, how much of their time are they willing to give?
Mm-hmm, mm-hmm. I think that's absolutely important as well. Because it's voluntary, so we'll do it when we have the time to get it done, even if you have the passion for it. Mm-hmm.
Just something from a practical perspective, which I think would assist those serving on boards, or assist any organization, not necessarily board members as well, which I actually forgot to mention in the first part of the program, was we did a joint publication with Amal a little while back. It was a guideline for non-profit organizations and public benefit organizations dealing with the tax, legal and internal control compliance for non-profit organization. It's a free tool that's available. So any organization out there that actually wants access to it can contact Amal's offices and get access to it. I think it's quite practical. It gives you, I think, a lot of the stuff that we're speaking about today as well. There will be practical guidelines provided, as opposed to just merely providing you with technical information. It is something that organizations can apply within their organizations. There's some excellent checklists in there as well. And it can be a health check of your organization.
Mm-hmm. We're going to take a quick break. On the other side of this, we'll discuss about VAT management for NPOs as well. You're listening to Let's Chat with myself, Faizal MJ Suleman. Our topic for discussion is empowering NPOs, and we're discussing taxes, compliance, governance, etc. Our special guests, Reza, Amra and Farida Lavangee, both highly qualified chartered accountants, tax practitioners, auditors, and of course, as we receive a message from someone, legends in their field. So we're quite excited having you guys as our guests this evening. Reza, just prior to the ad break, I did mention that I want to discuss NPO VAT management. Now, how does VAT impact NPOs in South Africa, and what are the key considerations for managing it?
I think firstly, this is one of the areas where, when I say I put on my boxing gloves with SARS, that I've been actually fighting them on it for about 14 years now already, and I've developed a bit of a passion doing so. Not so much from a technical perspective, but I think more from the practical side of things. But what we have found is that this is the one area which causes the most amount of financial loss within the non-profit sector. And as a firm, I think we specialize in value-added tax, especially for non-profit organizations. Non-profit organizations like you and I and most other businesses obviously incur VAT on goods and services, right? However, there's a benefit that is available to non-profit organizations in terms of them registering for value-added tax. We must bear in mind that donation income, which is the primary source of income for most non-profit organizations, is a non-supply from a VAT perspective. So unlike a normal business would obviously generate revenue and they would have to charge VAT on that revenue. However, with regard to non-profit organizations, there's no output VAT that has to be levied on donation income. However, the benefit that's available to the sector, and again, it's because obviously government sees the sector as an extension of what it was supposed to be doing, is that they are allowed to claim back the VAT on the cost that they incur. Now, most organizations are unaware of this and do not take advantage of this benefit. If I had to give you just one practical example, let's assume that there's a project where an organization is perhaps refurbishing a science lab at a school, and they've got a quote from the contractor, and the cost of that would be 115,000 Rand inclusive of VAT. Now, if that organization that's sponsoring this science lab was not registered for VAT, the cost would be 115,000 Rand to that organization. However, by being VAT registered, it actually reduces the cost to 100,000 Rand. Because what the organization would be able to do is they would be able to claim back the 15,000 Rand in their VAT returns. However, it's important to bear in mind that not all non-profit organizations actually qualify for VAT registration. There are certain categories of organizations that would qualify. And as I mentioned earlier on, ignorance is bliss. So most organizations sort of go by not taking advantage of it, or because of a lack of understanding of VAT itself, don't benefit from the dispensation that's available to the sector. What we also find is that organizations sometimes get incorrect advice with regard to VAT. Even SARS themselves, more often than not, what we do find is that the SARS consultants at a branch are not dealing with non-profit organizations on a day-to-day basis. So the first question when you go in and want to register for VAT as a non-profit organization is, have you reached the threshold of R1 million like any other business would?
Yes, absolutely.
And obviously the rules differ quite significantly for non-profit organizations.
So if NPOs, they want to access the VAT dispensations available to them so that VAT is no longer a cost to them, how do they do this? Can you explain this?
Yeah, so the first thing that an organization would need to do is they would need to assess whether they meet the qualifying criteria to register for VAT. We must bear in mind that the VAT registration rules for a non-profit organization differs quite significantly to that of a normal business. So once they do go through the criteria and ensure that they satisfy those criteria, then they proceed with the VAT registration like you would with any other registration. With SARS, obviously providing the relevant supporting documents, it's like the FICA documents, your founding documents, obviously the financial statements, bank statements, bank confirmation. There are certain instances where an organization could go back and retrospectively do a VAT registration, but it would be dependent on various factors and obviously on SARS to approve that as well.
Mm-hmm. And what are some of the some practical tips that you can share for NPOs to manage their VAT obligations efficiently?
I think for those organizations that are VAT registered already, we do find, again, even in terms of that VAT management, there's a significant amount of challenges. Because remember, your organization would be in a VAT refund position if you were registered for value-added tax. One of the challenges we find is that there's assessments being raised by SARS because organizations don't provide SARS with the necessary information or substantiating evidence for the VAT claims that they might have submitted. Organizations submit the claims quite late. So I think the starting point would be to ensure that you have a proper financial system in place and you are utilizing perhaps a cloud-based accounting solution, especially if you're doing so, because what that will allow you to do is, as Farida mentioned earlier on, as opposed to your financial records being updated on a monthly basis, it will now be done on a weekly basis. And like with any other business, you would have to submit your VAT return either on a bi-monthly or on a monthly basis to SARS. Now, it would be in your benefit as an organization to ensure that you are meeting those deadlines, because the sooner you submit the return, the sooner you're getting back your VAT refunds. So I think the first point on there is to ensure that your financial records are up to date. Secondly is to ensure that you are getting compliant tax invoices from your suppliers. What we do find is that very often organizations would receive invoices that are non-compliant. So perhaps the organization's VAT registration number is not on there, or you might not get a proper tax invoice. You perhaps paid on a pro forma invoice. So that's quite critical. And then even maintaining those invoices as well. I think gone are the days where you're maintaining invoices in a lever arch file. With cloud-based solutions and cloud-based accounting solutions, your invoices are actually linked to specific transactions as well.
Absolutely, yeah.
To then take it a step further, you want to then link your e-filing profile to your cloud-based accounting system. That then allows you to obviously submit the return directly from your system, minimizing the time and effort that's required to submit that return. And then thereafter, if it does go under VAT verification audit, it's quite critical that e-filing is being monitored regularly, because SARS could send out correspondence at any time, and you want to ensure that you obviously do not miss that correspondence, because if you do, then SARS will raise an assessment and reject that VAT claim. So obviously making sure that all your documents are available so you can actually manage the claims process with SARS and upload the relevant information to them timeously. And then thereafter this is the point when the boxing gloves need to go on and ensure that you're religiously following up on that refund. SARS has a period of 21 days within which to pay out that refund. And most organizations are generally intimidated because it's SARS and sort of lets it slide, and before you know it, it's a year gone by and your VAT refunds are stuck in there. But they obviously need to be following up on that refunds. And when we say following up, it's not merely just the call center call, because most consultants at the SARS call center are probably not going to give you much joy. So we obviously then generally escalate further and ensure that those refunds are paid out timeously.
Now, what happens to people like me that are not techno-savvy?
To be honest, the technology out there today is a lot easier to use than our old desktop software.
Okay.
So if I had to tell you that I went through a period where I didn't turn on a computer for probably 10 to 15 years, from the late 80s to perhaps early 2000s, you'd think I'm lying to you. But I had used an IBM DOS-based computer, and thereafter, the next time I saw a computer was Windows and color and that sort of thing. And then in my articles, I actually didn't even know how to switch on the laptop, to be honest. And I still remember a good friend of mine used to help me along quite a bit. Huzaifa Ilyas, shout out to you if you're out there. Guided me along in terms of the technology. I think friends on campus as well. I didn't even know how to type onto the next line. So there's hope.
There's hope.
So there's hope. But going back to technology today, it's actually made in a lot more user-friendly way. If you do something wrong, it's a lot easier with cloud-based solutions to undo it as opposed to the chunky desktop solutions that are available to us. So
in fact, I interviewed Huzefa on radio as well. A while ago when he had excelled in metric.
Oh, is it? Okay.
Yeah. I just can't recall exactly whether he was in the top but he was
definitely in the top.
It was in the top 3, 2, 1. I'm not sure, but he had done very well, undoubtedly. Yep. So there's hope for us, you say?
Definitely.
Okay. I know the last time I told somebody spoke about Windows, I don't know if we had curtains for them. Okay, let's talk statutory and donor audits. I mean, we've got Director of Audit and Reporting. So maybe, Farida, I can ask you these questions. What is the difference between statutory and donor audits for NPOs?
Okay, so let me start with donor audits because that's a little bit more simpler. It's very specific. It's required by a donor itself. So it's not something you're going to do on your own as an organization. It's probably going to be part of your grant agreement where the donor is going to specify they want an audit. Some donors are very, very specific in terms of what procedures they want done, even down to the amount of coverage, like that means how much testing needs to be done. So that you get some that are very, very specific. And then you get the ones that are a little bit more general. So with a donor audit, it's not the same as a statutory audit because you're focusing on a specific project or a specific donor itself. So you're auditing only that donor's income and expenditure. And you're trying to give some comfort to the donor that, listen, you've given this organization X amount of money and they've used it specifically as per the grant agreement. So most organizations, when they are doing a proposal, there's a budget that's drawn up. And the budget now becomes the Bible for the organization itself because you've got to stick to it. If you deviate from it, certain grant agreements will specify you need approval. So that's a donor audit. So it's very, very tailored to the donor itself. Then a statutory audit that's where I spend most of my time. So as a registered auditor, so statutory audit is done on the organization as a whole. So it's very what's the word I'm looking for? So it's very, very stringent because we're complying with, not are we just looking at from a donor's requirements, but now we're looking at, is this organization complying with the accounting standards? So whether it's, I'm going to be a little bit technical here, but talking about IFRS or IFRS for SMEs, which is the accounting reporting standards. But we also then have to do our audit in accordance with the international standards for auditing itself. So from a statutory audit perspective, the Companies Act has certain requirements as to when an organization needs to be audited. In the old days when we were at Varsity, all companies needed to be audited irrespective of the size and what they did. Then around 2008, I think, I could be mistaken, but around 2008, the Companies Act was amended and then they introduced something called public interest score. I'm not going to go into that detail now because it's a little bit technical. But essentially with the Companies Act amendment, they now said, okay, all organizations don't have to be audited itself. So depending on your size, but you could still decide to have a voluntary audit. Or most trusts, for example, the trust deed might say we want an audit done, or the constitution for a voluntary association might say we want an audit done. The other important distinction between the two is that to sign off on a statutory audit is very restrictive, so it can only be done by a registered auditor. So Reza and I are both chartered accountants. We did articles at the same firm. But the difference between us in terms of designations is that I'm a registered auditor, so I'm registered with IRBA. So that's the Independent Regulatory Board for auditors. So obviously not just anybody can go and sign statutory financials off. So very important thing for organizations out there is know what you're paying for and know whether that person is actually authorized to actually sign off on those financial statements for you.
No, absolutely vital. It's actually the first time I heard that a donor has the right to ask for an audit as well. I mean, it makes a lot of sense, but it's the first time I heard of something like that. Why are audits important for NPOs and what do they entail, Farida?
So I'm going to look at it from a statutory audit first. Obviously, if somebody's reading a set of financial statements that's been audited, it gives them some sort of comfort that, listen, this organization is above board, depending on the type of opinion that they're getting. But I'm assuming we're going to go with the perfect opinion where there's no issues with the organization itself. It's quite clean. So in that case, it gives you as a user or as a reader of the financial statement some comfort that, hey, this organization is okay. I can actually donate to them. So obviously there's that aspect. From a statutory perspective as well, there's certain funders that require you to have statutory audited financial statements. For example, National Lottery Commission, previously you didn't have to have audited financial statements. But in the last year, they've been asking for audited financial statements. So again, it's going to help you to get more funding. And obviously, if you've got audited financial statements, it adds credibility to your organization. So a donor who's looking at it is going to say, okay, they audited and they audited by a reputable organization, so I'm going to want to give them more funding. The other, from a donor perspective, obviously you don't have it's not voluntary. If your donor wants you to have a donor audit, then you don't have a choice there. But what it does add to your organization is that it tells the donor something. So if your donor audit goes fine and you get a clean report that's coming out, obviously it adds to the credibility. That donor is going to want to fund you again. They're not going to think twice about when they see your next proposal. They're not going to think twice about funding your organization.
Absolutely. So talking of best practices, what are some best practices for NPOs to ensure a smooth audit process?
I think the first one is, first of all, you need to understand what sort of service you're getting. And I say that because there's many services you can get. You can get somebody just preparing a set of financials for you, or you can get an audit, or you can get a donor audit. But when it comes down to whether it's a donor audit or whether it's a statutory audit, a lot of it comes down to your financial processes that you have in place. So Reza mentioned earlier some of the cloud tech that's available where your documents can be stored electronically, right? So he said gone are the days where lever arch files are used, but I beg to differ because I come across all types of clients, and we still have quite a few where everything is manual. They use an online system or they use an electronic system, but their filing is still manual. And then you get the other extreme where everything is filed digitally. Literally, you don't even have to ask the client for a sample listing because they give you everything. So being prepared for your audit you don't start preparing when you sign the engagement letter with the auditor itself. You start preparing at the beginning. You have to have proper financial processes in place. And that's not just about, yes, I'm going to capture everything, but it's about your document storage, your document management. Because as an auditor, one of the biggest issues we have is that we go on an audit and we ask for documents and it's not available. They can't find something. Or it takes them 2 to 3 weeks just to find something. So that becomes a nightmare. From a donor perspective, and I think this is important to organizations out there, you need to read your grant agreement very carefully. You need to understand what is it that the donor is asking for from the audit perspective, and make sure that you have everything that they're looking for. Because donor audits, besides the audit that they will want from an auditor itself, they also have donors require reporting. So quarterly reporting, for example. So you need to be able to make sure that your accounting system can give you all of that information that the donor is looking for. So it comes down to planning ahead of time. So understanding what is it that you need and being able to pull that information out. And one other thing from a statutory perspective, I think, as the auditor, again, I'm talking with that hat on, is that have the discussion ahead of time with your auditor. What is it that you want? What format do you want things in? So that the audit process can be smooth. I mean, I've got some clients where it goes so smooth because they know, they understand, and they learn year by year. But you get the other ones where they're stuck in their ways. So, it's been done like this for the last 10 years. Why you want to change things? So they're not too keen on the changes, especially with technology.
Many of us are terrified of technology because we don't know how to use it. So
Reza is our tech driver at the office.
Okay.
He's always finding new technology for us to learn and embrace. COVID was a challenge for us because that was when all of the tech, I think, was being introduced at the firm.
No. In fact, many of us became a little techno-savvy during COVID. Okay, Reza, we've got like Have you guys been having fun on the show?
Yeah, as I said, we could possibly go on.
Because you know what happens is that time flies when you're having fun. We've got like about 8 minutes to round up the show.
Yeah.
So I'm going to just touch on something that everybody knows of, is 18A certificates, right? What is the significance of a Section 18A for NPOs, and how does it benefit them?
Okay, remember what an 18A certificate allows is it's a way to encourage donations to the non-profit organization. Because what happens is that the donor is given an incentive to actually donate to that specific organization in the form of getting a tax deduction for that donation. So organizations obviously need to flaunt it. They need to utilize that to actually encourage donations into that organization. I think that's quite important in terms of making use of it. Sometimes even we find organizations even within or even the donor community themselves would say that they actually don't want an 18A receipt. But again, that's leaving money trapped with fiscus. As opposed to taking advantage of it and getting the tax break in terms of that deduction that's available to the donor community.
And can you explain the requirements for issuing Section 18A certificates to donors?
Yeah. So I think Farida touched on some important points earlier on in terms of 18A, because the most important aspect is obviously in terms of the activities itself. Right, you could be registered as an 18A public benefit organization, but not all of your activities might qualify for actually an 18A donation. So, for example, as Farida mentioned, your religious activities in terms of buildings of masjids or maintenance of masjids and madrasas as well wouldn't qualify for an 18A deduction. So you're not allowed to issue out an 18A receipt for that as well. There's obviously certain other criteria that needs to be satisfied. So where you can issue out an 18A receipt would be for cash or goods received in kind. However, you're not allowed to issue out an 18A receipt for services in kind. And again, we find that to be quite a risk area for many organizations, or even for a discount received. Sometimes we might find that the organization is requested to issue an 18A receipt for a discount. I think another common risk area is when there are fundraising sales, for instance, that's happening. You're selling a ticket, or the organization is selling some sort of item which hasn't necessarily been donated, for example, and they actually then end up issuing an 18A receipt for that. So those are some of the criteria in terms of points where you shouldn't be issuing out an 18A receipt. Obviously, the receipt itself needs to meet certain criteria. There were additional requirements that were introduced from the 1st of March 2023, for example, and I think this is quite critical because we're finding that many organizations are struggling with this data at this point in time, is donor sensitive information or information that you might consider sensitive. For instance, a donor's ID number, income tax number, address, contact details would now need to appear on that 18A receipt, which wasn't the case previously. Now, this is what allows for that pre-population of the donation in a donor's income tax return.
And some of the common challenges. Okay, let's just move out of the Section 18A. What about the mandatory IT3D submissions? I think they've been recently introduced, and what is it and how does it affect the NPOs?
Okay, so this is actually a recent development which SARS has introduced, which now requires non-profit organizations on a biannual basis to submit the IT3D return to SARS, right? Previously, organizations did not have to provide the information for each and every donation to SARS, but because of SARS's modernization program, where they now require third-party data to be input into income tax returns. So similar to your medical aid deductions, if you look back a few years, one would have to input that data into your income tax return to get the deduction itself. Likewise, with regard to salary earnings, previously that would be manually input, once you got your IRP5 certificate. However, that's changed. Medical aid companies now provide that information to SARS. So likewise, non-profit organizations are now required to act as third-party data providers to SARS, whereby they would need to provide SARS with all of the information relating to all of the 18A donations that they would have received in any given period. That allows for the pre-population of the donor income tax returns. So when the donor goes into their income tax return, they no longer have to manually input that information on the return itself.
I'm going to pose one question to Farida. She's been quiet for a while, and then we will have to round up the program. You earlier on you used the word grey listing.
Yes.
I recall you having used that word. Now, what does it mean for a country to be grey listed, and how does this impact NPOs in South Africa?
So I did touch on it earlier.
Mm-hmm.
So South Africa was flagged last year, I think in Feb 2023. Mm-hmm. And when they put us into grey listing, it basically meant that there was concerns that there was possible non-compliance with international standards on three things. One is money laundering. The other one was terrorist financing and proliferation financing. Mm-hmm. So from an NPO perspective, like I said earlier, they've identified that NPOs could be used as a vehicle for money laundering, obviously because organizations are receiving donations. So one way is via money laundering, and the other would be terrorist financing, especially where funds are going overseas, because we have quite a bit of organizations that do send funds overseas for humanitarian aid purposes. So from a South African perspective and how it affects NPOs is that there was legislation that was amended. So I mentioned earlier that there's now requirements about beneficial ownership. So you're now disclosing who owns an organization, but in an NPO, they aren't really shareholders. But you now have to disclose, the directors, the trustees, and to some extent, you're disclosing management information, because in certain organizations, management is actually deemed to be beneficial owners, depending on their role. Mm-hmm. And with that, also, there's, like I mentioned earlier, there's the Department of Social Development requirement now that if you are doing work outside of the country, it's mandatory for you to register. So those are some of the biggest impacts on the NPOs itself.
Reza, Amra and Farida, Lavangee, there's lots more to discuss, but unfortunately time has run out. I want to thank you for joining me on the program this evening. It's been absolutely wonderful talking to you, and of course it's been highly, highly, highly informative. In 30 seconds, just 30 seconds, I want each of you to just give a message for our listeners, please.
You go first, Reza.
If there's one thing, I think embrace the change that's coming. Utilize technology within your non-profit organizations. It will free up the most valuable resource that we all have, and that resource will come to an end one day, which is time.
Mm-hmm. Farida.
Oh, how do I follow that? I shouldn't have said Reza go first. I think for me, it's as an organization, if you're listening out there, if you don't know what to do, reach out to people who can assist you. I think that's the biggest takeaway for me, is that you need to be able to engage with people who can assist your organization and help you move forward.
Mm-hmm. Well, just to advise our listeners that the Association of Muslim Accountants and Lawyers, that's Amal, in partnership with Al Baraka Bank, Al Ansar and Chatswood Legal Circle, will be presenting a workshop with free advice, that's legal, tax and accounting advice, and this will take place on the 20th of July 2024, that's a Saturday, at 10 o'clock to 1 o'clock, and it will happen at our Al Ansar Hall, 189 West Road, Overport, and attendees can book a consult via the website, and the website is it's www.amal.co.za. I repeat, www.amal.co.za, and if you want to send them an email, then it's info@amal.co.za, and this is for the workshop where they will be offering free advice on legal, tax and accounting matters. As I say, Reza, Amra and Farida, Lavangee, thank you very much for joining me in the program this evening. Siboniso, thank you for having engineered for me. And Hajra Kota, thank you for having produced the program. And Farzana from Amal, thank you for all the logistics and, and making sure everything took place. We thank you, the listeners, for having tuned in. I'll be back with you tomorrow morning, inshallah ta'ala, on Rise and Shine. That's at 8 o'clock tomorrow morning. The next program we'll be listening to is Ikra Wifam, and that's a program which is presented by brother A.K. Muhammad, together with an alim, and this program deals with the tafsir of the Holy Quran. So let's derive the benefit of listening to Ikra Wifam. For myself, Faizal MJ Suleman, until tomorrow morning, it's Assalamu alaikum wa rahmatullahi wa barakatuh.